to your latest Carson's Take 5 with Ryan and Sonu. Sonu, we've been hearing a lot. The markets are up a lot. This has to be a bubble. So this week in the latest Take 5, we're going to talk about why this is not a bubble. Sonu, let's just get into it. I mean, I'll set the stage here. We're literally hitting all-time highs, like across the board. The NASDAQ finally hit one for the first time since November of 21. The S&P and Dow have been doing it. Mid-caps are flirting with it. Gold at all-time highs. Cryptocurrencies are flirting with all-time highs. I'm sure there's more things at all-time highs. Are we in a bubble, and are you worried? Because it almost feels too easy lately.
You know, what's funny about that is up until like last month, you're like, oh, it's just the Mag 7. It's only seven stocks going up. And now you have small cap stocks, Bitcoin going up, small stocks going up, the Nikkei going up, the German DAX going up. And everyone's like, oh, is it a bubble now? Like literally previous month, they're talking about, oh, it's only just seven stocks, whatever, right? And now everything else is catching up. And you're like, oh, maybe it's a bubble. No, look, first of all, it's very hard to identify a bubble before the fact or even during the fact, right? And then there's a thing about not all bubbles. I don't know. Do you pop a bubble or do you think about what do you know, whatever, right? Maybe not all bubbles pop. I mean, and then you think about, are bubbles a bad thing, right? I know we had the dot-com crash and all that, but you think back to the late 90s, what happened? Well, we got the internet. We got so much of, you know, deep sea, undersea cables, fiber optic cables along the world. Around the world, we had, you know, 3G came out of that, 5G came out of all of that. So I'm like always hesitant to call something a bubble. I mean, we won't know for the fact, but for now, it goes back to a lot of the work you do. Momentum is good, breadth is good.
Well, exactly. You know, Alan Greenspan was in charge of the Fed in the mid-90s. And in December of 96, to paraphrase this, he gave his famous irrational exuberance speech, in essence saying, hey, guys, listen, this feels a little bubblicious. All the S&P did, Sonu, for like the next 3 or 4 years was double. Okay, so we're not saying. First off, by the way, everyone, we don't think we're in a bubble. I want to be very clear, but I think what you're talking about here, Sonu, is listen. Markets can keep going. The trend is there. Again, just think about this. Small caps, which we've liked small caps for a while, aren't even at all-time highs. The NASDAQ is like virtually where it was in November of 21. Absolutely, we've had some incredible moves in some of these things, and maybe we're a little ahead of the skis near term. But big picture, we don't think we're a bubble. So I want your opinion on the economy. I'll just say this. January and February were higher for the S&P 500 this year. We took a look. The next 10 months, let's call that the rest of the year. Everybody ready for this? Has been higher 26 out of 28 times. Okay, that's just one stat, I know. But when you see things like that with this momentum, oh, by the way, we were higher in November, December, January, and February. When that's happened, the next year has been higher 14 of the last 14 times. I can go on and on with these types of things, but Sonu, it is a market with a lot of participation. There's a lot of stocks going up. Walk us off the ledge, maybe on valuations or earnings. What are some other reasons we don't think we're in a bubble like TV tells us?
I mean, just first thing, when you think about a bubble, my immediate thought is, okay, you know, our valuations, right? How much investors are willing to pay for, let's say, $1 worth of future earnings, right? Do you pay 10 times that or 20 times that or 30 or 50 or 100 times that, right? We're nowhere close to where we were during the dot-com crash. I'll also put it at that. Well, why stocks are going up? I mean, stock returns can be broken down into earnings growth and then multiple evaluation growth, right? And right now, you look back over the last couple of years, we talked about this with NVIDIA as well. It's all coming on the back of profitability. Why is that profitability? Because the economy is strong. Why is the economy strong? Because the labor market is strong, right? And then you have some icing and cherries on that cake. Residential construction, single-family construction is coming back. You and I have talked about manufacturing construction in the U.S., semiconductor plants, electric vehicle battery plants. All of that is happening. Something big is happening in the U.S. economy under the hood. And that's why profitability is high. Activity is high. That's why. That's what's happening.
Exactly. I mean, you follow social media. People say, oh, Janet Yellen, she's in charge of Treasury. That's a magic button that she pushes. Or
if only.
We're just printing money at the Fed, which isn't even true. We don't even get into that. The bottom line, everyone, earnings this year in the S&P 500 are expected to grow about 13%. Next year, okay, 2025, if my calendar is right, about 18%. Those are estimates. We get it, but we just had another really solid earnings season. Earnings drive long-term gains. The late 90s was a bubble. No question about it. A lot of companies made no money, and they had huge valuations. Now we have huge valuations, but companies that are making a lot of money. So we got like 10, 15 seconds. Anything you want to add before we wrap it up?
Yeah, and this, even if you think it's a bubble, protect yourself, diversify across different parts of the market. That's all I'd say.
There you go. Again, we like small and mid caps. Those don't, maybe some of the large tech names are a little bubblicious. We're not calling it that, but they've had incredible runs. There are other areas that clearly have some really, really good valuations and haven't been as stretched. And that's why it makes sense to kind of look at your portfolio from that point of view. Final comment on this, we call it the shiny object. So many people want to chase the shiny object, the leaders from last year. That doesn't always work. That can burn you. That's why working with a financial advisor to make sure you're not chasing that shiny object is going to help you in the long run. So with all that, everyone, hope you enjoyed this week's latest Carson's Take 5. Talking about bubbles, we don't think we're in one. We'll see everybody soon. Take care.